Have you ever gone up 10x in a day and then just have all of it taken away? So today I'm going to talk about the biggest financial mistakes that I've had when investing so that you guys don't have to make them. A lot of people talk about the gains that they make, but I think it's important to take a balanced stake in finance because investing is like a muscle. You have to learn from your mistakes and adjust your investing to learn from a lot of the things that you've done in the past. When you're starting out your investment journey, you're probably not going to know anything. And so it's really important to learn from the mistakes that you guys make. So here I'm going to share a bunch of investing mistakes that I've made so that you guys don't have to make them. So without further ado, let's just get into the charts. So one of the first times I started investing was investing in the Philippine stock market. So I'm from the Philippines, and actually I invested at the start of near the end of college around 2016, where the PSEI was around 7,000 pesos. Yeah, and then now actually, like 10 years later, it's even lower, right? It's at 6,300 when before it was around almost 7,000. So this was one of the mistakes that I made. And what I really learned from this is there is a lot of good financial advice. I mean, good, meaningful financial advice in the internet, but a lot of them lack nuance on the investment strategy. So if you look at it, people say that on average, the Philippine stock market has returned 6-7% per year over its entire existence. So the reason why I invested in the Philippine stock market was because, oh, it's just gonna be a stable return, and I could just leave my money there and not think about it. Fast forward 10 years later, and my portfolio is no better than it was before. And so it's actually worse, and it's lost money to inflation, right? And the nuance that people actually forget to give when investing in the stock market is that average number is just the starting price. So here in, let's say, 1987, which is around 800, and the ending price. So now it's at 6,000. And then they get a geometric mean or an average compounding rate that gets you from the start to the end. That's all they meant when they say that on average it returns 7%, 8%, 10% a year, right? What that fails to show us really is the color of how each of the periods actually did. So if you see in the Philippine stock market, it has actually huge periods where it actually is pretty range bound, and it depends what you mean by range bound. But from 1980 it went up to 1996, so that around 10 years of going up. Then it spent around from 1997 to 2003, so around 6 years going down, and then it started going back up. But I mean, this entire up and down sideways motion was almost like 30 years from 1987 to 2007, this entire range bound. So the Philippine stock market, for example, has huge swaths of time where it's just completely range bound. So for example, right now we're in this time from 2000 2013 to 2026 where it's just range bound. And who knows, maybe this 13-year difference is going to be the start of the next leg up for the Philippine stock market. But this is something that people don't tell you. When people give you financial advice on the average returns or all these things, it's important to take context on what they mean by that. Because a lot of these numbers, there's hand wavy numbers, are useful to give us a broad picture of the market, but knowing and seeing the individual color of the market is completely different. When you look at Philippine stock market across all other markets, these behave pretty similarly. So for example, when we talk about the S&P 500, for example, let's pull up that, which is the biggest stock market in the world and actually has probably, it's like, I think 60% of the global index. It is mostly up only, and yeah, it's much better than the Philippine stock market because when they actually say 12% a year, it's actually going up 12% a year. So let's look at the S&P 500. But there's also color coming here. So for example, here the S&P 500, the same time frame, right? From since 2009, actually the S&P 500 has just been going up. Like there has been periods where it dips, but if you just look at time spans of these dips, it's actually pretty small, right? So if you just get the date range, right? This last dip was like 56 days. And then the this dip was around, you know, 500 days to recovery. So like 2 years. But yeah, so and then there are major drops here. This was the 2009 financial crisis, right? Where it took how many days to recover? 1,000 days, almost 2,000 days, which is like from 2007 to 2013. So that's around 7 years. So these are the things that you have to think about when you're talking about nuance, right? So what did I learn from this? What I learned from this is it's good to get advice, from people that they mean well, and they're giving you they're trying to give you meaningful advice. But at the end of the day, you really have to look at the charts, look at the broader market. What does this information actually mean? So in the Philippine stock market, when saying it's going up 8% on average, that is true. But what they really meant is if you took the geometric mean of the entire series, that's the average return that you get. There are going to be huge swaths of time where it does nothing. And when talking about the S&P 500, it's the same thing. The 12% annualized return is pretty much it. That's going back since 2009, where look, it's been all the way up. But there has been periods of crises from the year 2000, which is the dot-com bubble, where it took around 7 years for it to recover, right? And then in 2007, when it recovered, there was the 2007 to 2009 financial crisis, and then it took another 7 years for it to recover, right? So these are the risk things that you have to consider when you're investing, right? The biggest thing now is when you're looking at all this, what is the best advice? I think not financial advice, but if you're looking at all of these things, the best kind of leave it financial instruments probably low expense ratio, broad market index funds. So probably like a world fund that tracks the index of the entire world. Because if you're looking at all of that, the world just tends to go up. And even in financial crises, it goes up. The US is actually 60% of that market. So if you want to be more exposed to the US market, some people just buy the S&P. But yeah, in terms of investing, this is something that I really learned. And secondly, other than just looking at the trends and learning the nuance of the advice, what I really came to realize from the experience of investing is investing doesn't necessarily mean that this company is gonna be the company that stays this size forever, right? So what does that mean? When I initially started investing, I invested in companies that I thought, oh, they're gonna be there forever, so I should just invest in them because it's gonna be hard to lose money if they're gonna be here 10, 20 years from now. So there's a bunch of things there. One, I was picking stocks. Picking stocks is horrible. Don't do it. The probability of you picking a winner is pretty low. Although I feel like if you want to do it for fun or to experiment and learn, go for it. Just know what you're getting into, because I think education, is the primary thing. But second, when you invest in a stock, it's not really the current value that the market is looking at. When you invest in stock, it's actually looking at the future value of that thing discounted to today's thing. So the market's actually expecting anything that you invest in to already achieve its future full potential discounted to today's price. So for example, when people say that, oh, why are people investing in SpaceX, right? SpaceX doesn't have a ton of revenue now, but they're buying into the vision that SpaceX becomes this massive company that like just dominates space travel and harvests resources from other planets, right? So that is that future GDP of that company discounted every year to the current price is actually what the price reflects, right? So when you're investing in a company, it's really important to know like what is the vision of this company, why are people investing in this, and yeah, that's what I learned primarily from this experience in investing. So that's one of my biggest things. So after 10 years of investing in the Philippine stock market, I lost maybe like 10%. Nothing really happened. And, I still have money in the Philippine stock market. I probably should just pull it out. But who knows? It's not that much money now compared to what it was when I had it. Because when I had it, I was just like still in college, right? And so, yeah. The second investment thing, biggest investment mistake that I made was OHM. So this was me pretty new to crypto. Yeah, so when you're new in crypto, you're just trying a bunch of things out. And there was this project called Ohm that was actually guaranteeing, well, not really guaranteeing, but they were saying they were having an 8,000% APY, right? And, as a broke, just graduated person, I just graduated college. I didn't know much about finance or money or any of that. So I was like, wow, 8,000%. And, you always see these crypto bros making a ton of bank online, right? So this was a Reddit post like 5 years ago, I think, 2021. Yeah, Ohm Protocol, 8,000% APY for staking. Too good to be true. And yes, it was too good to be true. So I bought this. And I ended up staking it. And for the first few days, it was amazing. You were getting so much money back. And then I was holding this for a month. And then after a month, the price just collapsed from, I think, $1,000 per Ohm to around like $40 per Ohm. You can actually look at the charts on CoinGecko. So this is the chart of Ohm and CoinGecko. You can see I bought it at around, I don't know, 1,000, something like that, yeah, near the peak, because when you find out about these projects, it's usually like blowing up in social media, and that's probably when it's too late. So I bought it at 1,000. It was going down to like 800 and it was going up, and I was like, oh, the inflation at that time was just offsetting the decline. So even if it went down 20%, because it was like 8,000% APY, I didn't feel it yet. It was just break even. And then a few months later, it absolutely crashed. It absolutely crashed to like $26, and I got wiped. I only had $1,000 in here, which was a significant amount of money to me at that time. But yeah, what this really taught me is that a lot of things, if it's too good to be true, it probably is too good to be true. You know, Markets, yeah, are pretty efficient. And when things have inflation, so this is basically inflation, they're printing 8,000% more tokens so that the holders hold the token. The thing is, there's no intrinsic value. And this is actually what, taught me more about like macroeconomics, right? And even like the normal, like the dollar or the peso or any of these currencies. Inflation technically happens because they're printing more currencies into existence, right? Every year, the government prints more money. Every year, the US prints more money. And when they print more money, if the number of goods don't increase, or production doesn't increase, production and productivity doesn't increase, the price of the same goods starts to rise. And that's why we have inflation. So if the production of goods and the efficiency of markets don't increase with the number of price, then suddenly there's more money to the set amount of goods. So if there was just like five, dollars in existence, and, five, I don't know, let's say corn, you know, each corn would be like, if you're mapping it 1 to 1, you could buy each corn for $1. But suddenly, if they printed five more new dollars, and there's just five corn, you can match one corn to $2 now, right? So each corn would be $2. And this is a weird analogy. It's like, why are we just matching them? Because I mean, if you just imagine these dollars as people, right? Now there's 10 people. Just imagine there's 5 people, and then there's $5. Each of them could bid $1 per corn, right? But now if each of these people had $2 each, bidding $1 per corn is no longer possible because there's only 5 corn. Once people bid $1 per corn, they're gonna realize, oh wait, I have one more dollar. I can outbid someone by bidding $2. So that's how it kind of works. We're all just kind of bidding for things, and if the set amount of goods is the same, then people will just use the more money that has been printed to bid for the same amount of goods. And it's kind of what's happening here. When more money, it doesn't actually increase the value of anything. So yeah, in terms of inflation, when you're talking about these APYs, be very skeptical, because even if they just print more money, that doesn't mean the price of the underlying asset is better. And even then, the economy doesn't necessarily support these kinds of movements. So yeah, I mean, TLDR, if it's too good to be true, it's probably too good to be true. And in terms of these APY inflations, yeah, be very skeptical, because a lot of this is just printing things out of thin air. And even traditional currencies who do that end up failing. Like, there has been hyperinflation in some countries where they just print money and their currency goes to zero, right? So yeah, this is one of the bigger things too. I lost probably $1,000. Lost probably like 90%. I didn't recover anything, but it was just $1,000. So this is just number 2 on the list. Number 3 on this list, so it's getting much bigger, is this coin. So this was published in 2021. So there was a coin called Chia, XCH, and yeah, I was pretty new to crypto at this point, probably just a year old, and I had heard about this coin online. Again, when you hear about the coin, it's probably too late. Anyway, there was this coin wherein you could buy hardware, because I was thinking about Bitcoin mining and Ethereum mining at that time, because I wanted a consistent stream of income. And then I learned about this coin wherein you could just buy storage, like hardware, hard drives, and mine it that way. So it's like proof of space is what they were calling it, because you're using gigabytes of storage to mine the coin rather than computer CPU for Bitcoin. And I thought this was pretty cool, right? And at that point in time, the return of investment was so fast. Like, if you had bought $100 hard drive, you could have made your return of investment in around 10 days, which was insane to me, right? Yeah, and actually what ended up happening was the prices of hard drives actually skyrocketed at this point. So you can see Chia's initial high prices could cause a storage shortage, and this is what was actually happening. It was creating like such demand for these kinds of things that it was making hard drives more expensive. And this was working for me for a while. I actually spent around, I would say, almost $6,000 doing this one. And this is what it looks like, and it did not end well. So I actually got in here at the start at 2021, and it actually skyrocketed in price. It skyrocketed in price, and it was actually really crazy. Like, at one point, the return of investment was just 3 days. But it took me a while learning everything because I'm not a hardware guy. You know, I had to learn how to use the terminal, how to build my own computer because you're like building these things from scratch. So by the time I finished the device, it was actually somewhere around here at like $800, and I think the runway was like 45 days for the investment. And at that time, I didn't really know much, so I was just thinking, oh, I'm just gonna hold the XCH, you know, and sell everything when I've broken even. And that was actually the wrong way to go about it because what I learned from this is that markets are super efficient. If there is a mispricing of an asset, the market slowly corrects itself, right? And what does mispricing mean? Mispricing just means that it figures out that, oh, this is the wrong price for the asset, you know? So, for example, the hardware storage, this thing, it was insane that people were getting this much money. And then more and more people started to pile onto this opportunity because who doesn't want just a 10-day return of investment? So, as more people went into it, the more difficult it was to mine. And then the time it took to mine it got longer and longer, and a lot of people just started to sell because they wanted to, I guess, recur a lot of their initial investment, which was what I should have done. I should have slowed slowly instead of waiting for the end and just sell everything at the end. But anyway, as more market participants joined, it got harder and harder to mine. People started selling more and more because they wanted to recoup their investments. And then the price actually just ended up tanking. And I would say I lost probably like 70-80%. I did sell a bunch. But yeah, my return of investment was probably pretty negative here. So out of the $7,000, I probably kept $2,000 at the end of everything. Um, what is the takeaway here? I think the takeaway here is that, yeah, markets are pretty efficient. If there's mispricing in an asset, meaning there's like an arbitrage opportunity, like 10 days return of investment, that is crazy good. What usually happens is that more more and more people try to get into this arbitrage opportunity, and then the amount of gains shrinks dramatically until it's back to where the market expects it to be, right? So when you find these enormous opportunities where it looks like it's crazy overvalued, you should probably take some money off the table because those opportunities tend to shrink as more market participants come in, right? It's just too tempting. Like if you had a 10-day ROI, it's just too tempting to sell and just make your money back, then have, you know, just basically free money profit after a while. And in mining, this is actually really hard. So I also explored Bitcoin mining and Ethereum mining. It's really hard. You can make money, but it's very competitive. The higher the price goes, the more money you get, but then the more market participants enter. So actually, when you look at the hash rate, when the coin is going up, more people actually end up mining because like they want a piece of that pie. And then when the price tanks, sometimes the hash rate like lowers a bit, you know, and people are forced to sell because the people that make money when the price is low are only the people that have a competitive advantage in mining. Like they have cheap power or free power because of solar, or they got their machines for free because they have a connection to the hardware manufacturer. So markets are efficient that way. You're technically competing with everyone in the world that wants the slice of this opportunity. And as more people want more and more of that slice, the slice gets smaller and smaller for everyone. So that's how you think about the markets right now. Yeah. So yeah, this is one of it I lost. And then I guess the last investment thing that I lost, well, I don't know if it's necessarily the most because I did cash out a bunch, was Gala. So this was another coin I invested in the early days, and I actually spent around $13,000 on a Gala node. So a Gala node was an instrument, or it's like a miner actually. You download software that has like a fingerprint so that it knows that this is a specific node that you have. But basically, you run the software and you mine and you contribute to the network. So similar to Bitcoin mining, except instead of buying specialized hardware, you just pay for the software that you need to run the node. Anyway, I had spent $13,000 on this because, you know, it seemed really good, and GameFi was like all over the news. Again, if you heard about it, it's probably too late, or you know, you should probably sell earlier rather than later if it's like a narrative driven thing, which is probably what I could have done. Anyway, I heard about this. It seemed really good. It seemed really good actually because, you know, I loved games, and Axie Infinity had blown up during this cycle. Like it was like absolutely wrecking it. So I invested in this $13,000 into this node, and it was paying me, you know, it was mining me and paying me a decent amount every day. I forgot how much it was, but I was making around $100, $200 a day. And yeah, I think my ROI was like a year. Anyway, I was holding it. I bought it around here, the Gala node. But since this was a node, this wasn't tokens, right? It was something that was printing me tokens, but the asset itself was just software that I had downloaded. It was printing me money, and then at some point, it just shot up. Like on November 25, 2025, I went up 10x from the tokens that I had. But I only had this for like a month or two, right? So I didn't have that much tokens yet. But the amount of tokens that I had was enough to actually break even my initial $13,000 investment. So imagine breaking even $13,000 in just 2 months and still have the underlying asset that you had. So I was like pretty driven by like euphoria. People were telling me to sell, and I didn't know any better. I said, no, I wouldn't sell, because I think one of the things that played into my mind was also this diamond hands mentality. People just keep saying diamond hands, diamond hands, diamond hands. And no, that's not true. Like, don't listen to that. Each investment should have its own risk profile and own strategy. This is not a long-term investment. This shouldn't have been a long-term investment. This is a small speculative play, and I should have exited at that time. Anyway, it went up 10x. I didn't sell, and then it all went all the way back down, as you can imagine. So I was still printing tokens this entire time. So I was still sort of psychologically ish okay, but I had also come down from Chia mining, and a lot of those tokens were useless already. So I was starting to feel whether or not I should sell. Eventually, it had this small spike back up, to 0.05, 0.06, and I ended up selling all the tokens that I minted for around, I would think it was around $6,000 or $5,000 in total. So I lost around $7,000 or $8,000 in total from this trade. Yeah, and that basically didn't get that money back. What I learned from this is that each investment that you make should be clear why you're investing in it for, and you should be really clear about the risks. Over the years, what I've learned was that when you look at crypto and you look at the top 10, historically, if you just look at the top 10, all of these coins in the top 10 changed or have died. The only things that have stuck since the beginning of their existence is Bitcoin and Ethereum. All of these have changed. Before, there was like Namecoin or like some other coins. And then if you know that a lot of the coins that you invest in that pump massively might not exist in the coming years. And so you should probably de-risk and get out, right? It is okay to make these investments, but you should know why you're making them. If I had known this information at the start of Gala, then I probably would have cashed out then and there. And also Chia, that would have made it a okay investment. I would have made money, but at the end of the day, if I had just put all my money then in Bitcoin in 2021, I would still be in a much, much better position than I am now. It's like, what price was it in 2021? So in 2021, Bitcoin was at $32,000. And if I had just bought that, yeah, Bitcoin would have gone down, but eventually it would have gone back up. And a lot of these small coins never recover. They'll just cease to exist. So yeah, basically those are my biggest financial mistakes so far. Hopefully I've learned enough from them. And what I've learned is, one, when people give you financial advice on stocks or whatever, it's important to really have nuance on what that means. Look at the data. What is the statistics they're telling you, and how does that affect you? People are talking about like the 4% rule now, that if you withdraw 4% of your portfolio, you could retire with that money as long as the principal is big enough. So like basically 25x your yearly consumption. So if you want to spend $100,000 a year, multiply that by 25, that is the amount of money you need to retire, and then you just withdraw 4% of it every year. A lot of people say that, but there's a lot of nuance to that number. This number is useful, but people should know what are the nuances of the advice people give you. So just like with stocks in the Philippine stock markets, it is true that on average it is 8%, 9%. I don't know exactly the specific return, but all that means is the geometric mean of the return from the beginning, right? There are huge periods of time where it doesn't do anything. So when people give you financial advice, try to put that advice into context. What does that mean? How is this asset behaving? If it's too good to be true, it probably is, especially when in terms of APY. When people just sprint money out of nowhere, that doesn't give anyone value, and it's just basically a Ponzi scheme waiting to collapse, right? There has to be a mechanism that drives growth for that APY to actually mean anything. 3, know what you're investing into. Markets are extremely efficient. If it seems like it's mispriced, like the opportunity is too good, more and more people are going to try to take that opportunity, and the slice of the pie will get smaller and smaller. Know what kind of investment it is. Is it a long-term play or is it a short-term bet? And you should know it based on the context of that asset. what kind of asset is this? At what financial instrument is this from? When I invested in Chia and Gala, I should know that this is a crypto asset in the crypto space. And knowing the crypto space, looking at all these assets, most of these assets disappear. 99% of them disappear over the long run. So I should have cashed out at those particular periods in time, right? It was an okay entry, I guess. I mean, there was a period where it was up 10x, but I should have exited, right? Know what kind of move these kinds of things are, and prepare for them. Yeah. So basically, those are my biggest financial mistakes. I've changed my strategy now, and I'm just pretty much all in Bitcoin and ETH right now. A lot of the times, failure in financial markets is a good thing as long as you learn from it. In fact, at the start of my crypto journey, I was hacked and lost $1,000 for connecting my wallet to some random website. And I kid you not, if that event did not happen a few weeks ago, which I actually made a video, I'll put it maybe over here. A few weeks ago, I was almost hacked for around 25% of everything I own in crypto. So if I didn't get hacked the first time, I would have probably gotten hacked now for much more, much more. So everything should be a learning experience. Learn from your investments. Learn from other people's failures. Yeah, and with that, hopefully you guys got something out of this video. And yeah, like and subscribe, and I'll see you guys next time.